Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. On the 4-hour chart, we're looking here for a bullish scenario where we have a double 1, 2, 3, 4, 5 to finish this green 3, then another 4 and another 5. Bit of a question mark if this is the high of wave 3 over here or if we have to move this one to the upside, because if this is your wave 4, it is incredibly short. For a wave 4, it would be better actually to have a longer wave 4 here and then a flat structure where this wave 4 takes a bit more time compared to wave 2, as this wave 4 over here hitting the 0.236, which is a common target for a wave 4, is incredibly short, and probabilities are higher generally that a wave 4 is longer in time than a wave 2. If price continues, therefore, the probabilities are still there that this is a 3, 4, and 5 to finish a green wave 3, then a green 4, and another green 5. However, generally, we are expecting at least one more range in wave 4 before eventually a wave 5 to the upside, where the range in wave 4 should at least be the same amount of time, if not longer, than the wave 2 that we had over here. If we go to the more local bullish scenario, then we are looking for an impulsive structure to the upside. Here we have a wave 1, 2 finished, 3 arguably in here, looking for a 4 and another 5 towards the upside. Common target for a wave 4 is between the 0.236 and the 0.5 Fibonacci, taken from the low of 2 to the high of this wave 3, giving you a target area between 51.4k and 50.7k. The invalidation for a wave 4 is the 0.618, sitting here at 50.3k. If price is gonna retrace to this level, probabilities are higher that this is a 3-wave structure to the upside and that we are looking for a bigger flat structure in than that blue wave 4. On the micro here, the bearish scenario is that a flat structure I just highlighted, where in this case we are then looking for a 3-wave structure to the downside in wave A, 3-wave move to the upside in B, and a 5-wave C to the downside, where the most common target for this wave C is below the low over here of A, all the way to the 1.618, sitting at 46k, taken with a Fibonacci tool from the low of A to the high of this wave B. Now you can see that for a wave B flat, the 1.618 target has been reached. This is a Fibonacci taken from the high to the low of A, which is a less common target for a wave B in a flat structure, as the most common target is between the 1 and the 1.236. Also, locally, if we are looking for an impulsive structure to the downside in a wave C, as we look for a 3, 3, and then a 5-wave move, impulsive move to the downside, then we want to see impulsive moves on the lower time frames. If we look here, we made the high, move to the downside, and price then retraced to the 886 Fibonacci. And the 886 Fibonacci is a rare target for a wave 2, but common for a wave B or a wave X, increasing the probabilities that any move to the downside here is a corrective structure, not an impulsive structure, which therefore decreases the probabilities for an impulsive wave C to the downside and increases the probabilities for these highs to be taken sooner or later. If we then go to the bearish scenario on the 4-hour chart, we are looking for a flat structure in a 3-wave A, 3-wave B, 5-wave C towards the downside. Here we now reach the common target area for a wave B in a flat, which is between the 1.236 and the 1.38, 51.6k to 53.1k. And in this area, you want to look for signs of weakness for then a impulsive structure to the downside in a wave C. Now this area here is also, by the way, in confluence with the bullish wave 5 target area. So if we count this as a wave 1, 2, 3, 4, 5, as shown earlier in this video over here, 1, 2, and then 3, 4, 5, this is an important target area for a wave 5 as well, for then a bigger corrective structure to the downside. So there is overlap between the common target area for B and a potential wave 5 target area here between 51.6k and 56k. In order for this to be a flat structure and a wave B, this move to the upside, however, has to be a 3-wave structure. What you can see, however, is that this wave C starts to be quite long. If you take a trend-based fib extension from the low to the high of A to the low of wave B here, then the 1.618 has been passed, and this is a little less common target for a wave C. Now a wave C can be quite long. Over here it went to the 3.618 trend-based fib extension. Here we had a wave C that went to the 2.618 trend-based fib extension, but nonetheless, usually the 1.618, yeah, it is a target, but going past it does lower the probabilities for a wave C, increasing the probabilities for an impulsive structure to the upside. On the monthly time frame, we are currently in the middle of this monthly gap here, right? All-time high candle, moved to the downside, and then we started ranging, hitting the gap for the first time, big rejection, hitting the gap for the second time, increasing probabilities to fill the gap. And now in this month, we are inside this gap. We tested it for the third time, higher probability to fill this gap, where then the target is 53.3k. Some areas on the chart that are good to know is that we also have a weekly gap, and we now reach the low of this weekly gap. The high of the weekly gap is the same high as the monthly gap top over here at 53.3k. So if we can enter this area, higher probabilities again to move towards the upside. And also here, this resistance box did not really do anything when price was moving to the upside, but I now labeled it white as it can still act as support. And also it is in a bit of confluence with the target area for a potential wave 4 in white here. As you can see, between the 382 and the 05, there is a target box here which can act as support, is sitting between 50.9k and 50.7k. If we then look at the probabilities of the different scenarios, then on the 4-hour chart, probabilities at the moment are higher that this is an impulsive structure to the upside, where we at least want to see a bit of a bigger range similar to the ranges that we had over here, and after that range we still expect at least one more push to the upside to finish an impulsive structure, but also we're looking to fill this monthly gap. On the 15-minute time frame, probabilities at the moment are also higher that this is an impulsive structure to the upside. We over here have an 886 touch, right, decreasing probabilities that we have an impulsive structure to the downside, increasing probabilities that this is a corrective structure which then fits a potential wave 4 for then a move to the upside in a wave 5. As always, we do keep our eyes open for potential weakness, bearish CVD divergences for example, or losing certain levels, and then probabilities may switch, but at the moment these are the probabilities from an Elliott Wave point of view. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.